Good afternoon and welcome to the Blue Line Metals Edge here for Wednesday, November 16th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. Haven't done one of these videos in a while. I was kind of retooling some of the algorithms, some of these markets when they make these big moves. Sometimes you got to take a step back here and run some new models on things. So I'll dive into it. I'll show you some of the things that we've been doing over here. If you haven't checked out our website, go to bluelinefutures.com. Be sure to register for a free 2-week trial on our research here. You can check out a couple of the reports that we do write. I also write. Remember, what makes us different here is we provide research written by traders for traders like yourself. So the market that I focus on here, one of the reports, the Tactical Insights, I'll show you kind of a breakdown on how to use that particular report, especially if you see a big move in the market one direction or the other like we have. We'll identify the trend of the market, the which way you should be trading, and then also some entry and exit points. Another great report to look at is the Morning Express. It's going to outline more of a fundamental backdrop, give you some of the key data points coming out, as well as some of the key levels to watch out there. Now, looking at the markets here today, we're still kind of getting this. The Dow Jones is leading the path higher. You can see this daily Dow Jones chart. This market's continuing to move up. We got a couple days of consolidation. We do have some earnings that came out. Remember yesterday we saw Walmart, we saw Home Depot. They did real well. Today we've got Target coming out, and the retail sector I think is really going to struggle. And it's not struggling now. It's going to continue to struggle into the end of the year. I really think the ripple effects from inflation really took a lot of that disposable income that people had or that savings and really ate it up. So I think Christmas is going to be a little bit more coal in people's stockings. You can look at the NASDAQ here. Looks like it's just bouncing to another lower high on the market. Sure, we did take out this one move. Was this move that we saw last week, this massive rally in the markets, 1,200 points in the Dow, hundreds of points in the NASDAQ. I think it was a little bit overran. I really believe that they were trying to get this S&P up to that 4,100 level. They came close to it. Here's your 200-day moving average, 40.83. But I'm telling you, I'm really looking. If we see any kind of breakdown here, this could be a real big fall. Look at how many times this has happened in the past. We get this momentum going, this short covering bias. We get the narrative out there. They're thinking that the Fed is dovish now, that inflation has peaked, and things like that. And they run into this market, but the reality is that, hey, the Fed is still going to raise. They're going to raise here 50 basis points at the December 14th meeting. They also believe if you go out to things like February, in March, and now I think it's even May, they're all expecting these 25 basis point rate hikes, at least Goldman Sachs is. So they don't think that the party's over as far as the rate hikes are concerned. And another question I got to ask you, and you should ask yourself, is what happens if the inflation data actually accelerates again? Well, that's going to pull the rug out from underneath the market. So getting back into a couple other things here, we do have the 10-year. This is really interesting. Take it up. We got a cup and handle pattern to the upside. We're probably going to look at some call spreads in the 10-year, in the 30-year, and then looking at the metals. Great run up in the metals. I was really impressed. I thought that it got a little bit ahead of itself. I'm a little bit nervous buying anything up at these levels. If you're going to do it, have a defined stop loss, or maybe utilize a longer term put option on the market, like on gold, for instance. Buy the 1650 put now. I know it's a little bit speculative, and if the market corrects down to that level, you're buying your safety net ahead of going into the future. You're buying your life jacket before you go out and buy the rowboat. So that's one thing that we're looking at here. Same thing on silver, looking a little bit toppy here at the moment. Copper starting to break down. Remember, copper led this way up. Copper could be leading the way back down. Also on the metals, I really think that the dynamic, I think, has changed a bit on the metals, especially when you got that NTX crypto exchange going under. I think a lot of people, it was very unfortunate. You may have the same situation happen in another, whether it's crypto.com, whether it's Gemini. People are definitely doing some detective work, looking at what the assets, what the liabilities are, what they have on file. We were really scratching our head when we saw that FTX, they had a coin called Donald Trump lose $7.3 million worth of it, and they're listing that as an asset class. I mean, I'm just saying it's a little dicey. Looking at the platinum market, that is breaking down as well. China's been kind of ping-ponging back and forth. We're reopening. Oh, we reopen our COVID cases. It accelerates, 100% overnight. We need to close back down. So remember, use stops on any of these things here at the moment. And then like what I was saying with the tactical insights, I do outline and I use a longer term algorithm to identify what the trend is, what the change points are. We're looking at these breakouts, but on longer term basis, like on monthly and weekly charts, and looking for the tide to turn and confirm itself. And then what I was doing here was I'm going to start putting this out where I outline kind of the strategy that I'm going to approach with my clientele and some of the people that follow me, like on gold, buying extreme breaks. Now, what is an extreme break? You could start to look at some of like these reversal points and things like that. You look at the low today, 773. We were saying buy a reversal down to 771. On silver, for instance, 21.26. The low here today was 21.46. So, those are outlining some of those extreme breaks again, like we're looking at. So on platinum, there is a seasonal trade at the end of the year. Buy April platinum. Oh, it's actually at the end of November. November 30th to January 26th worked out 15 out of 15 years. We've done this one like clockwork every year. So let me know if you guys want to see what those numbers are. We'll probably do a write-up and send that out. As far as crude oil, we're buying March micro crude oil, 82.50. I'm going to put in sells at $85. The 82.50 is just filled a minute ago here. And then on the dollar, if you're still long the dollar, remember the dollar, despite most metals traders hate the dollar because they think the Fed is fiscally irresponsible and this and that, I got to agree with you. I'm not disagreeing that at all there. It's just been a really good trade to the upside. If you look at the dollar over the course on the daily chart for, just months and months, it's ran up. This was your big red flag, the series of lower highs. If you're still in this trade, which many people are, you're going to want to put your stop loss, I really believe, below the 200-day moving average. Comes right around 104.53. I think we're putting those right around like 104.40, 104.60, somewhere in that range here. So if we don't get that bounce back, like what we're looking for over the next couple days, it could continue to sell off, and then you'll see another breakdown or another breakout on a lot of different markets. So kind of two-sided trading there, but again, this is a longer term position, not a newly established position. Looking at some things that kind of stuck out. This is on Forex Factory. I'm using the Metal Mind calendar, and we saw this one right here, UK CPI year over year. Look at this chart, accelerating to a new high. The inflation's still going on over in Europe. That's what I'm saying, is that what if our inflation dips first just a little bit? Now you go and you look at Europe and all these different countries, then theirs, because they're lagging us, theirs starts to dip. Well, if theirs dips, their currency will dip, the dollar will go up a bit. And then what happens if our inflation reaccelerates? The dollar's going to go up even more. That's what I'm saying. That's why you want to be cautious at these moments. Buy the extreme breaks, gold, silver, use other metals like copper and platinum as those defensive, as matched up in a pairs trade against your things. Use stop losses and use calculated risk call spreads on those markets. So that's the best advice I can give you here today. Thanks for being back on a Metals Edge video, and I'll try and post more of these on a frequent basis. Remember, futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.